All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Tuesday, August 15th, 2017. This is being recorded Monday night. We've got a busy morning, so unless something really significant happens, this will be the report for Tuesday morning. So, big move today. Kind of came unexpected, but this has been the kind of MO of the market over the past few years, actually. If we pull this thing back, we can see here all of the big scary dips have been pretty quick, and then the market rebounds. Going back to the big run from early 2016, we've seen that over and over again, and we haven't really had a real significant down move. They've just been these quick 1, 2, 3 day things. And it looks like we're getting that again. And over the past year and a half, this has been a really profitable time for us when these things happen. We've been really timing these well. We have the right strategies for it, and it's worked out well. So today I got pretty aggressive, and maybe, whenever this happens, I always think to myself, did I get too aggressive? But we're going to go with it. So I already had two positions. We talked about this over the weekend or Friday, that I was happy to have two positions because if we got the bounce, we would participate, which we did. Especially FSLR flew nicely today. And then I added Tesla, the VIX inverse ETF, which we'll talk about, and NVIDIA, which we had planned. And we traded it just as we planned, although I expected this to happen maybe a week from now. And it happened in one day. And some of you asked me, is it kind of extended here to be entering at this point? And yeah, it is a little extended, but it fits the parameters. And again, we'll talk about that in a second. But let's go over the indexes first. SPY, you see this 1% move. We have basically invalidated last Thursday's down move and back up over the 9, exactly what we want to see here. And if we look at the Qs, same thing, even stronger, 1.3%, invalidating Thursday's down move, and we're almost up over Wednesday, and we easily cleared the 9 here. So a lot of strength there. If there's one issue I'm having, and I've been having this for a while, it's the volume pattern is not great, but the price action was so good that I kind of just ignored that. And sometimes in the indexes, you can do that, especially in the summer months. So we're just going with the price action here. The Qs look really good. Now, overall, IWM is lagging in terms of the overall pattern. It's not over its 9. It's not near its highs. But as a one-day move, it actually bounced higher than the other two indexes. But we're more focused on the Qs and then specific sectors. So when I say Qs, I mean the big tech stuff, and then specific sectors and stocks. Other area that was really strong today was financials. The underlying index, and usually financials is a move that stronger than the other indexes, but 1.37%. Right at the 9 here, but really nice bounce. I almost considered taking the FAS position, the leveraged ETF, but already had 3 positions, and I want to be in those positions. So held off on FAS, but that's a good position if you decide to take it. It was on our focus list. I know some of you did take it, and that's great. So financials looking really strong. Gold, obviously, is not going to be strong on a day like this. And then commodities and energy was down today. So oil getting hit while it's been on a run. XLE getting hit. And then our metals that we like FCX, was up 1.3% on this one, but they didn't really break out of any patterns here. So for now, we won't focus on these. We can only take so many positions at a time. Although keep an eye on them. If they were to all of a sudden really start popping, we could add them. Now let's get to the trades that I made. The focus list is pretty much the same, except I've added a few defense stocks because defense has been so strong, since the election. But now with the political climate, it's even stronger. So we're in FB, Facebook. Nice bounce today, 1.6%, so ahead of the Qs. We're about 2 points above our entry here, and get another basically halfway to the target. So after some scary periods in here, we're bouncing back here, and like we said before, this is exactly the way we wanted these to perform with these loose stops at the gap fill. Is let them go with the market, but hopefully they can hold that gap fill as the market is tanking, and Facebook has done that. And then FSLR even better. Nice bounce today, 2.8%. Solars are on fire. So, we're playing not only here, but we want the breakout of this high, and we want to get to 52, 53, 55, somewhere in there. Additions today. Tesla. I entered, I think it was around 366. It did pull back in a little to 263. It looks so strong intraday, but still up 1.66%. Stop is going to be around 355, somewhere in there, maybe a little lower. And then target, again, will be at least to the 380, 83 range. But if it looks strong going up to that target, I may play for a breakout and a move. It has that feel of you made the run, pulled back, and now is ready to break. I may play for that 400, 415, somewhere in there. So this could be a really big one if it starts to move. And then NVIDIA. Let's talk about the NVIDIA entry. So we got the gap down on earnings, and we've talked about this. The go-to move on these really good stocks has been to treat these gap downs as buying opportunities. I wanted to wait till the end of the day for it to, one, clear this range in here when it started to run here. This was a great day trade, by the way. I know a lot of you were day trading it. I was day trading it. But for the swing, I wanted to wait, and then it already cleared that 165.30 range. So when it got up to around 166, we could get in at that point, and then it popped in another 2 points. So really strong. So even if it pulls back in a little, it's just right around our entry level. But once these things, these gap downs, once they clear the gap down level, they usually pretty much invalidate that thing and then fly. So that's why normally, some of you, felt like this goes away from the way I normally trade, but there was a strategic reason to do that. Even though it was up at this point, 6% or something like that, it ended up around 8%. That was the reason behind it. And now basically the gap down is over. We're back on trend, and we expect this thing to fly. So, and I think I put a pretty aggressive target on this. I think this could run to 200, but I'm not going to play it that high. I can always get back in. But that was the idea behind NVIDIA. We've got Tesla. Now we got to talk VIX. And we laid out the strategy, which was basically UVXY pops. And then when it's done popping, unless you're in a real strong downtrend, once the pop is over and you get the down move in VIX, that's been a good signal for the market that the market is going to run. That's happened over and over again since early 2016. So I'm just going to go with the trend, and that's what's been happening. So that's what I'm going to go with again. So that's why I was willing to get aggressive. And that's also why I took the VIX short, because once the pop happens and the pop is over, basically VIX is going down. And at least that's been what's happened over and over again. Hopefully this isn't the time where it doesn't work, but that's the idea here. So we took then SVXY, which is the leveraged ETF here. So we don't have to short it. We can just play SVXY to the long side for a quick pop. Now, if this was something I plan to hold for 2 months or something, then I wouldn't be using SVXY because of price decay. And if you could short UVXY, that's actually the better move because the price decay works in your favor. And if you need more explanation about that, we can talk about that later. But for now, I just want the quick pop to the top of the range, which would be a really nice trade. So if we can get up here to 90, 92, 95, even 100 really quickly, that's what we're going to play. And we'll manage the downside here so we don't take too big of a loss if the market starts ramping to the downside. And the one scary thing about this market is even when we have the technical patterns, if something in the news comes out, there's a nuclear test in Korea or whatever, we've had the riots over the weekend. So if something scary like that happens, that could cause something unexpected. So we have to protect ourselves from that. So, my temptation was to take a 500 share position. I wanted to get big on this, but I had to rein myself in and think about all this other stuff. And you always have to protect yourself first. And of course, if this goes up to 92, I'll be kicking myself, wishing I took the 500 share position, but we have to protect ourselves. So that was the idea here, only taking 200 shares, but at 80, if it pops to 92, 200 shares, that's $2,400, which is right in line with the kind of trades we want. So that was the ideas behind these entries. We've got our current position, so 5 positions at all, completely to one side. We're not hedging at all right now. So hopefully that doesn't by this. So we'll see. But focus list essentially remains the same. The ones I really like, I probably can't add them now because I've got 5 positions to one side, and even that feels like a little much right now. But if you're looking to add something, the other solar I really like is SEDG. Look at that nice bounce off the hammer, off the 9, ready to run and break that high. So I really like SEDG. So if you're not in FSLR, SEDG is a great play, and it's only a $27 stock, although as you guys know, it shouldn't matter if the stock's a $100 stock or 27, it's a percentage gain, but I know still a lot of you guys like to trade smaller stocks. BA, putting in a very similar pattern here, has run, pulled back, now rebounded to 9, looks really strong, and I'd like to get into one of these military stocks. I'm always watching them, I haven't traded them yet. AAOI, gap down, and this is another semiconductor, and I won't play this unless it crosses the 75 level here, which would get us over the 50 and into the gap. So watch for that. But when it runs to 75, this thing could go up to maybe 90, 92, or even break to 100. So keep an eye out on AAOI. And then we have LMT for defense. And also we have SPR, which is an earnings breakout pullback. Hold the 9 really nicely, and now bouncing here. And you could play this thing to the top of the range around 74, and that would be a nice trade. You only have to risk about $1.50 to potentially gain $4 or $5 there. So that's 3 to 1, 4 to 1, 5 to 1 risk. So really nice setup with SPR. So we're going to add that to our focus list, and then FAS, of course, financials, ETF. Looking really strong. And then you could also do something with TQQ as well. Especially some of you guys mentioned that you can't trade the VIX ETFs out of your 401ks. Those of you who are trading out of those, because it tracks futures, but you could do TQQQ because I believe that's not tracking the futures, it's tracking the Qs, which is a basket of stocks. So I think TQQ is an option within your 401ks if you're doing that. But even if you're not, you could just directly trade basically the Qs here, which is putting a nice pattern as well. All right, guys, so that's the trade report. A lot of good stuff here. Hopefully the market continues the way it did today and we get some follow through here. Basically, if we get some follow through, this is going to be a really profitable period. And if not, we'll take a little bit of a hit, but it'll be manageable.